All right, so welcome to our YouTube channel. This is Jeff the Vlog. So for today's video, we are going to tackle or discuss about candlestick. So this is for beginners. Okay, so if you are pro or really good at this, you can just comment and help others, that is currently watching. So we are doing this in English because have also some viewers from other countries. Okay, but we will explain it in layman's term. All right. So what is candlestick and why is it important for us to read or for us at least to know the basics of candlestick, right? If you are doing spot trading, scalping, or long trade, it's also important, of course, most especially really for spot trading, it's important that you know how to at least identify what will be the trend using the candlestick. Though of course, it's not really like 100% proof that it will be followed, right? But this is a guide that really helps us to see what will be the trend in the trading for whatever token you're investing for. Okay. So we have the candlestick chart. And what is a candlestick chart? So let us define first what is candlestick chart. So candlestick chart is used, it reflects a given time period and provides information on the price open, high, and low, and of course close during that time. Each candlestick symbolizes a different period. So let me show this one to you, okay? So this is what we're talking about, the open close. So open, this is the body of the candle of our candlestick, whatever it is. It could be a bullish candlestick, which is usually it's represented by color green, and the bearish candlestick, which is of course commonly it's red. Or I don't know what is this. Is it red orange or orange? But usually it's red, right? Green and red. Okay, which is also represents go and stop, something like that. So we have the body, which is really easy to spot. Why? Because it is bigger, right, than other types of candles. So bigger, and it has the open and close. Open means it started in that level, right, in that price. So let's say, for example, the in a specific time it opened at 0.30. Just an example. Okay, so it opened at 0.30 and it ended or closed at 0.50. Okay, or in 0.50. Okay, so you have 20 0.020 difference there. So meaning to say it becomes green because the closing is higher than opening. So that represents now the bullish candlestick. And it will be the opposite of the bearish candlestick, which means it opened, let's say, at the price of 0.35 and it ends the price of 0.30, so it will become bearish because the closing is lower than whatever it opens, right? And how about this like a narrow line, or it's a stick, upper and lower? So this is what we call the shadow. It could be a wick or what we call upper shadow and lower shadow. So what does upper shadow and lower shadow represents? Aside from the body, so the wick is like a thin line that extends from the top, right, to the bottom, okay, of our body, or the body of the candlestick that we're referring to here. Um, they are referred mostly as shadows. Okay. So the upper wick, this one, or the upper shadow, okay, that indicates the greatest price achieved throughout the time. So whatever the greatest price achieved throughout the time, then it will stop right there. It will have that kind of wick. Okay, and the lower wick will be, it is commonly referred as the tail. All right, because it's at the bottom part, and that's the lowest price. Okay, but the most important thing here is this is the body of our candlestick. Okay, so we have here the direction of the candlestick as well. Of course, if we see a bearish candle, then most probably the market is really having selling pressure, right? So you need to be careful, you need to be cautious. If you are trading in Binance with, let's say, whatever token it is, I'm not sure if it's in other tokens as well, but because I'm trading an SLP like a Smooth Love Potion for Axie Infinity game, another NFT games, we can put again the stop limit so that when BTC goes down dramatically or drastically, it will trigger to stop and sell whatever you can put there, like you're selling the amount of token you are going to sell. If it's 75% of your token, 100%, 20 or 25 or 50%, whatever, you can put it there. You can put stop limit for you to avoid big loss, right? It's important. If you would like me to create an English video about stop limit, I think I have that already, but it's in Tagalog. But if you guys want, of course, to listen, not just to read with um the closed captioning, right? I can make another tutorial video for our foreign watchers out there, because I noticed that in my analytics in the YouTube, there are watchers all around the world, not just in the Philippines. Okay. So let's move on to our Dodgy candlesticks. So we have Dodgy candlestick. Okay. This is these are candlestick patterns. So Dodgy, we have of course the common Dodgy. So the vertical and the horizontal thin line is just like equal. All right, it open and close there. We have the long-legged Dodgy. So the horizontal is shorter and the vertical line, or what you call this one, it's longer. That's why it's called long-legged Dodgy. So if you take a look at them, they're all like cross, right? But in different patterns. We have the gravestone Dodgy. All right, it's like inverted cross. So the line in the upper part is longer and the opening close is somewhere in the lower. Dragonfly, it's the opposite of the gravestone here, which represents long, um what you call this one, long wick at the bottom. Okay, so what do this Dodgy candlestick represent? So with the dragonfly Dodgy, this one, let's start with this one. Again, it has a long lower wick, right? That indicates a session long bear. A session long bear, so bearish, that's negative, selling. Run followed by a comeback. So it will be followed by a comeback to the starting price. So followed by a comeback to the starting price. So that's what Dragonfly Dodgy means. So we have the Gravestone Dodgy. The Gravestone Dodgy, it has a huge top, right? Or it's a long, thin line on the upper part. And that means it indicates that higher price. Normally, I think it was like the higher price was rejected in favor of the lower price. And it indicates a negative. Okay. It indicates negative. Meaning to say the following candles really with high possibility will become red or bearish, right? Okay. And the long-legged Dodgy, of course, yeah, the vertical line is longer than the horizontal line. That shows that the market has like instability or like uncertainty. There's no really assurance what will really happen, but basically it's in the middle. Like it can go up. It can have like bullish, or it can be bearish. That's why this long-legged is like really an equalizer. You don't know, but it's uncertain. So much better as well that you need to focus, or you need to be cautious if you have this long-legged Dodgy on the trading chart, because it's important. Mhm. Next, we have the hammer. We have hammer, candlestick, and the shooting star. It's easy to identify what is a hammer, because hammer, of course, you have the thin line at the bottom, and for a shooting star, it's like shooting above, right? Vertically. So shooting candlestick. It's the opposite of the hammer candlestick. So what do this candle represent? Of course, again, this is one of the most common candlestick in the world of trading. So for those who are trading here for so long, then you are really familiar with this. If you're even new, like using whatever, TradingView, CoinGecko, CoinMarketCap, and other uh, apps, you can really see this candlestick. In the middle, or maybe the latest candle that is currently showing. And this candlestick means that, mhm, um, of course, this hammer candlestick first. All right. So this hammer candlestick with a prolonged top wick and little or no bottom wick. Okay. It emerged at the bottom of a downtrend, and typically it indicates the possibility of a bullish reversal. Okay. So the shooting star, on the other hand, we should not, of course, we should not confuse ourselves, because it is the inverted hammer, right? So both appear the same. The signal for this, it means that the peak of an uptrend, okay, at the peak of an uptrend, the shooting star is typically considered bearish indicator. So typically it is a bearish indicator. While at the bottom of the downtrend, the inverted hammer is typically considered as a bullish signal. So remember, again, at the peak of an uptrend, okay, shooting star typically considered as bearish indicator, okay. While, right, at the bottom of the downtrend, the inverted hammer, okay, is typically considered as bullish signal. All right. So it's very simple to identify and to know what will be the next candle, whether it's an hour, sorry, hourly, every 4 hours, 12 hours, or per day, right? The next will be the bullish engulfing and bearish engulfing. This is also very common. Why? Because it's easy to spot. When you say engulfing, the word engulf means it's like that overlap or engulf than the previous one, right? The bullish engulfing candlestick is a big green, right? This one, big green candle that engulfs totally the previous red. The previous should be red. That's why you can call this one bullish engulfing. Otherwise, if this is red and red, then no, it's just like a kind of bearish trend with a really strong force of bearish trend, right? So here, the reverse becomes more dramatic as the body grows larger, right? It grows larger. The body should totally shallow. I'm sorry. It shallow. Swallow. I mean, swallow or engulf the red or the bearish candle before this green candlestick. And this pattern It typically appears during the bearish trend. So if you have the bearish trends here and if you have the bullish engulfing, then yeah, that's how it shows. Okay, during the bearish trends. So the bearish engulfing candlestick is made up of bullish candle, all right, that in bullish candle that is followed by a bearish candle. So we have bullish here, we have this bearish candlestick that engulfs this green candle, and this pattern suggests that a bearish move is on the way and occurs during a bullish trend. So negative pressure, selling pressure, all right, because it will be followed by whatever the engulfer is, whether it's the bullish engulfing, it will be a bullish trend, and the bearish engulfing, there will be a bearish trend. Okay, but again, it could break, depends upon what will be the following, I mean, on the fundamentals or what's happening on the market, right? And we have this one, the evening star and morning star. So how can we spot this? Of course, it is made up of 3 stars. Triple pattern. Okay. So during bearish periods, the morning star, this one, appears and typically suggests an upside reversal. Why? Okay. This pattern begins with bearish candle. This one is a bearish, that is colored. And then it moves down. Okay. The day 2. And it could be a little bearish or a little bullish candle. So we don't know really what is this. Most probably it could be bullish, right? And then forming a larger bullish candle. It will become like this. Okay. So open day 1, close. That's why it's lower. Let's say it's open in 0.35, it closed in 0.30. In day 2, it will become like this, smaller. And in day 3, it goes back, right? So it's like a circular, but we don't have here at the upper part. It's just like that, like U or V. We have the evening star. Again, this one, of course, it indicates a selling pressure. Okay, from the first day, right, and subdivided to a bull market by approaching, and we have this bullish. So the evening star, it shows the opposite one. Okay, you have the bullish candle first, initiate the bullish candle, followed by the minor candle. It's like the opposite of this one. Bearish normally, it could be bullish, right? Depends. Then the price falls down. Okay, forming a larger bearish candle. At this and this denotes conclusion of an uptrend, and is incredibly significant, when the candlestick wipes out the gains of the first. So that's how it is. And the last one, we have bullish harami and bearish harami. So what are these harami? As you can see, that's how it looks like. So bullish harami candle is similar to reverse form of the bearish engulfing. It's just reverse image. You have the long bearish first, and then next to that it will be followed by bullish, but it's smaller than the bullish one. Okay, so the bearish harami candle is the inverted of this one, of course. The bearish harami candle is inverted form of bullish. This one is the bullish, of course. The bearish harami is the opposite of the bullish harami. All right. So these harami patterns, um, it normally surface over 2 or more days of trading, right? The bullish harami depends on the initial candles to show the continuation of descending, all right, descending price trend, and that the bearish market is trying to push the price down, trying to push this one down. And we could see, we could see um a candle. Okay, so in the bullish harami again, it depends on the initial candle to show the continuation, right, of the selling price trend, and that the bearish market, is trying to push down the price. And the candlestick chart analysis, gives us really this kind of wide range of patterns for us to anticipate the future trends, including the bearish harami, which serves to predict or forecast imminent reversals in a trending directions of prices. So, yeah, these are for basic or beginners of candlestick. So basically, again, we just don't need to get confused ourselves. Familiarize ourselves with candles. This one again is a harami candles. This one is a bullish. All right, you have the bear, long bear, and short bear, bullish. And um, again, it indicates that the bearish market is trying to push the price down. Okay. Mhm. So, what else? I think those are some of the candles and some of the lessons I have for this candlestick chart. If you do have a question, if you do want me to elaborate more or something that you got confused still, you can write down on our comment section what it is. But for me, the most important here is for you to check as well. Aside from this, will be the support and resistance level of our candles. So I won't get you. I won't let you, or I don't want you to make like get. I don't want you to get confused or make it confusing. I mean, so I will do a separate video for the support and a resistance. All right. It is, of course, in connection with this candlestick. Because if you cannot make that support or resistance line if you don't have the candlestick, right? It's hard. So it's very important for us to know as well the support resistance, if it will be bouncing, if it's resisting, or if it's doing a retest, right? And whatsoever. So I will do a follow-up video with regard to that one or another separate video. Okay. Thank you so much. Don't forget to like, comment, and subscribe to our YouTube channel, Job the Vlog. And until our next upload, have a great day.